Good morning, everyone. How are we doing? Good afternoon to those around here in the UK and in Europe. Good to see you all. Ready to do good business? Definitely, definitely. So let's see what's shaking. Now, I did a fairly big write-up about taking larger trades. Um, and the trade I was talking about, and we called out this trade actually. We called it out in these 2 days. We said, get ready for the look below and fail of 73.91. And in fact, on the second day, our 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 trades were long here and selling up into the 76.31. That is a rotation of 240 points. Okay. On one contract, that's 10 grand. Okay. Easy. Execution, not easy. Having the capital, you need 24 grand to hold a contract overnight. So, if you're trading even a 10 contract position, you need a $500,000 account to do this trade. Okay. So it's not, but you can do it with options, right? You can do the look below and fail of 73.91. Now, what's your risk? Right? Your risk is you're buying 7,400, your stop is 91. That's your risk. Once the thing clears 7,400 and it's going to come and you see it back tested here and it can't take out 74x6, you stay long into this move. Now you can use my levels to elect when to take the trade off. Halfway up of the zone is 75.11. The top of the zone is 76.31. Okay? So that is a huge, if you're thinking that we only give you trades for scalping, right? We don't. We talk about these large time frame trades a lot. The only problem is you cannot make a 240 point trade and hold the thing for 2 weeks if you got 5 grand in your account, right? Or if you're trading a funded trader account, right? So it's delusional for someone who can't make $50 a day to try and make 200 grand in a month, right? But what I teach you on the 1 minute chart is the same business cycle that you're seeing on this daily chart. Okay? That is something that the business never changes. Okay, so you had to look below and fail. And then yesterday and the day before, I was saying, look above and fail of 76.31. So you're shorting that 76.16. Your stop is 31, right? And you're saying, JJ, that's a big stop. Well, you're not going to make an $80,000 trade with a $200 stop. Okay, so you can't. The thing about trading is you can't be delusional, right? You can't think you're going to make an $80,000 trade with a very small stop. You have to be able to take a loss, and those losses are business expenses, right? So that's really, really important. Really important, right? So on this look above and fail of 76.31, right? There's an $80,000 if you had done 10 contracts or 20 contracts, right? If you had sold short 20 contracts, right, you would have been covering down here in the 70, 75, 40 area, right? And that's an $80,000 trade on 20 contracts. And you could have initiated it in Globex when Globex opened, right? Now your risk on this, your R&R ratio is something like 5-1, right? So $15,000 risk, $80,000 reward. That's not bad, right? But you can't do it on a $2,500 account, once again, right? This isn't gambling, this is market structure, right? This is what I teach in the trading syndicate. One setup, clear levels, 80 grand on a 20 contract overnight trade, right? Simple. Is it easy? No. Right? It's not easy. You got to work at it. Right? But what I teach you, and look at the risk. Your risk, my level was 76.31 and 3/4, and look at where the markets topped out. Here it was 2 ticks, here it was like 2 points. So had you been shorting up here on those previous days, say you got into this early and you were short here, that's your risk. Very simple. Right? And then how do you cover? You put buy orders down at my levels and you cover as the market goes down. So say you shorted 20 contracts up here, you take off 10, 10, or you could do 5, 5, 5, and 5, and scale them down, right? So I want to dispel the notion that this room is only for people who scalp. The reason why I teach you to scalp is because you guys, when you start trading, you don't have the skills to make 80 grand overnight. You don't have the money or the skills. So you got to start somewhere, right? And that's why I teach you how to scalp, so you learn how to think quickly, you learn the mechanics of what's going on, and you go through the motions of this without losing your house, right? This way you don't have to mortgage your home and end up living in a cardboard box, okay? Learn how to make $50, $100, then learn how to make $300 to $500. And the thing is, you got to learn how to keep it. Okay? Now, let's get to business at hand. Overnight inventory is around 80% short. Okay, LC says 82%, which means 82% of the volume traded and time spent is underneath yesterday's close. Okay? So we're already correcting inventory upward. So after a liquidation, what are you guys looking for? What is the most important thing to look at after a liquidation and the market starts to correct higher? What's the number one thing that we're looking for? The number one thing we're looking for is where are they going to sell into the buying, right? Where are they going to sell, right? So they might be selling here. They might take out the overnight high, when the regular market opens. But as soon as a market does this and sells off and goes sideways and comes back up, what you're thinking as a trader is you're thinking, where are they going to come in and start selling into this? Not, oh, I'm going to buy it and it's going to go like that. That's not what you're thinking. You're thinking of where are they going to sell into this? Because they are going to sell into a market comes down, goes sideways. This is the sell-off. This is the absorption of that inventory. And then when we start going up, there's going to be places where they sell into it. And it's going to be at these tops of these candles. That's where they initiated on the way down. They'll initiate there on the way back up. Okay? Does everybody understand what I'm talking about? Is that clear? Hey, good stuff, Scott. Good stuff. Right? We want to make the trades clear. So you do your work, you make your money, and you get out. And you're not looking at 300 different things. You know, you're looking at what you need to look at to make money. Everything else, who cares? Right? If the VIX does this and the ODT guys do that and the seller of puts does this, who cares? Have you ever made any money looking at any of that stuff? You have not. You have not made a dime looking at any of that. So keep it simple, right? And just do exactly what I tell you to do, and you'll be fine, right? All you got to do is do what you're told, because you're being told how to do something by somebody who knows better, right? And that's not ego. That's 34 years, open heart surgery, 14 dead friends, about 4 blown up brokerage firms, right? A couple of Wells notices, right? I've got the experience, okay? Trust me, right? It works. Now today, right, if we take out that overnight high and we start adjusting inventory up, you see this red line here? That's where I think the sellers are going to be, right? So number one, let's see if we can stay inside yesterday's range, right? And if we take out the overnight high, we're looking for larger traders, you're looking for, what's this area here? 75, 76. Remember we had 75, 76 as support? Remember that? And when it broke, all of the candy above 76 spilled out. Okay? All of that inventory that was long over 76 fell out. Now, I want you to look at something else. Okay? Look at the lows here. These two lows. They're before 75.11. So on the way up, when the markets retraced and came back down, there are buyers here between 75.11 and these two lows. So by any chance, if we do get a liquidation and we take out the overnight low, my friends, you are going to be looking for those two lows down here, right? I'd say 75.16, 75.15. Okay, so the bottom area, right? Let's call it 75.16. Okay, if that level breaks, then most probably 75.11 will break, and we will get downside continuation. Okay, these are our piñata lows. If you break these lows, all of this candy is going to start coming out. And where is the position? The position's all the way down here underneath 74.54, right? Because we took this cheap stuff and we sold it, and now we're going to put it on sale. And when we put it on sale, Do buyers come in and we do this? Or do we put it on sale and it keeps going lower and comes back into our cost basis? Right? Simple. And this is what I'll teach you in our room. Okay? This is what I'll teach you in our room. This is what I'll teach you in our one-on-one coaching. Okay? There's going to be some changes to my one-on-one coaching program coming. I'll let you guys know when it happens. Okay? If anyone's interested in one-on-one coaching, the price is going to be going up. So if you guys are interested in one-on-one coaching, reach out today to lock in to the rate that I've got for now. And it's lifetime coaching. It's lifetime one-on-one. Okay? Right? I spend the time with you, and sometimes like April, I was sick. April, I was really sick and I wasn't able to work very much. But that's why it's lifetime coaching, because over a 5-10 year span, it's going to pay for itself over and over and over again. Okay? So let's see. We're going to open above yesterday's low. We're going to open inside range, right? We're going to open in this weird, there's kind of like, as Elsie would say, it's a price probe of this N. And this is, Travis, you with me? Can you hear me, brother? Right? That's why we use the 5 o'clock close, right? Once again, instead of that CME close, because this gives us information that traders who are using the close up at 72 don't get, right? So what we're doing is right now the price has been accepting in the price probe down area, right? But if that changes, we'll get above 70, what is that? Oh, 75.62 and change right there, right? Now it's a weird probe. Was there any news yesterday after the close? Because I went to sleep early and I might have missed, there might have been some news out, right? Oh, okay. That's Broadcom, right? Broadcom and Fed Yapper. It's funny, I had a coaching client years ago who was a lawyer at K&L Gates who actually worked on the Broadcom IPO. Brilliant guy. Horrible trader because he liked to fight. He was a lawyer. So he would argue against the market. He never won. Oh, I see. Yeah, there's that big drop. Down under. Let's see if it can get back and stay under 411 on good old Broadcom. Oh, cool. Okay, so we've got sellers at 55. Right, VWAP's down here at 70, 75.42 and a quarter. So we know we have sellers up here just under 55. Do not be surprised if when we open that we test yesterday's low. Okay? It's possible. It's entirely possible that we go and test the low of yesterday. If we break yesterday's low at 42, look for some bids here at 40 and then somewhere down here at 36, okay? The best trade would be a look below 75.37 and fail, or a look below 75.31 and fail. Now, yesterday, you noticed that even though inventory was short, we did not get that big move back up, right? Inventory is once again short. Let's see if that phenomenon happens again, because it's telling us that there's sellers in the market. And it's very, very important for us to know if there's sellers in the market, so we know not to go long with our eyes closed, right? Remember, as Ray says, close your eyes and go long, right? Those markets, a little bit more difficult these days to close your eyes and go long. There's actually, yeah, there's no singles until we get up to 75.59, Marcus. This is excess, right? So here we go. We're open. We're coming down, and we're going to test. Going to test that previous day low. Caught a little bit at VWAP. I wasn't fast enough to buy that. Let me see if that holds, right? There's the previous day low. Now, when VWAP's flat, sometimes you can take a long off it and put your stop just underneath it, right? So say you buy 42, 43, put your stop under the bottom of that candle, and you know there's going to be a seller somewhere here, 46, 47, and they're going to sell into it, right? Oh, yeah, from last Thursday. Thanks, Marcus. Right? If you're unsure about what to do when the market opens, just watch and wait. Right? You don't have to kill yourself getting chopped up. The open is a very difficult sequence to trade. Right? A lot of people get trapped and they don't know how to trade the open. Right? Trading the open is difficult, right? It's not easy, right? So I bought one at 47, I sold it at 49. Just for 2 points on one mini, right? I'm putting my toe in there. I had one nice trade this morning with 10 contracts, so I'm not going to give back that money, right? So now I'll scalp until I see an A plus setup, right? When I see an A plus setup, then I'm good to go, right? If it holds this 46, it'll rotate back up. And when it does rotate back up, make sure you have your sell orders out. Long 46 out, 48 and a half. Right, my next contract, ooh, look, I'm out at 49 and a quarter, right? Nice. Overnight inventory is short. This is the expected move is higher to correct overnight inventory, right? So when I saw the market bid 46, I bought the 46s. 46 to 48, 49, that's good enough for me, right? 2-3 contracts, 2-3 points. You make a living, okay? Sure, it's great to make $400,000, $200,000 in a month. But for us mortals, we have to start somewhere, right? And even the guys who make 40 or 50 million dollars in a month, and there are traders who make 40, 50 million in a month because they're trading thousands of ES contracts and holding for them for hundreds of points. But they didn't start trading that, right? When they started trading and they didn't know what they were doing, nobody just hauled off and handed them, oh, here's $1 billion to trade with, right? They all started at the same place, right? We all started at the same place. We all start at the beginning. We all have to learn what to do. Now let's see if we take out that seller at 55. Okay? Right? Why is it going higher? Because the sellers at 55, even for a brief moment they saw buyers lined up, they're raising price. If we stay over 55, the target is the overnight high. If we come back underneath 55, just use the levels, right? If you're looking for a long and you want to position yourself long, don't buy the breakout. Wait till the market backfills and buy the backfill, right? So you could have bought 54, stop 53, sell 57. You got to be quick, right? The best trades are at the edge, but if you can't trade at an edge, and our Croy and I were talking about that over and over again, trying to find edges, right? You know, it's it's a tough market, but we're going to have to adapt. It's the only way to do it. Now, over 55, targeting the overnight low, back down to 55, right? This is what we call rotations. What are we rotating? We're rotating inventory. Okay? Very simple stuff. Execution is hard. That's why it's a lifelong process, and we're always working at it. And even the best traders, right? Even the best traders sometimes have trouble with execution. So the edge, Milo, right? If what's an edge? An edge is where you have the best odds of getting a good price. So if the cost basis is here, right? If the cost basis is 31 to 37, the edge is if the market comes down, looks below 31 and comes back up. That's your edge. So that's why I do these levels and I color them different colors. This way it's easy for you guys. When it goes from purple to green back to purple, there's the edge. When it goes from green to blue back to green, there's the edge. See? When it goes from one color into the next and then pops back up into the original color, there's your edge. Get it? That's where you're getting the best deal. No problem. Good questions. Right? That's why I color code these levels. Cost basis blue, profit zone green, discount zone red. Right? Pretty simple. And then once you go to 4 times profit, then I use this purple color. Now the thing is, Sierra chart only has a certain amount of colors. That's why I'm kind of limited. Right? So the overnight point of control is down here at 75.40. We're selling it at 75.54. Right? So they're making good money taking the cheap crap that they bought underneath yesterday's close and selling it here. That is the business. That's why we're going back and forth like this. If we hold steady, buyers will come in and then we'll go up to this 59 area, right, to grab some supply. Can I ask for cost basis blue at Home Depot? Hey, that's not a bad idea. That's good marketing, Tim. Get Home Depot and the Home and Garden channel on the phone. We got some marketing to do. Right? Your kid's room should be cost basis blue. Right? Wife's bathroom 4 times cost basis or 8 times cost basis, right? So do you see how we ran out of supply underneath the overnight high? And we ripped up to get it because inventory is short. right? Inventory is short. Oh boy. One thing I haven't looked at this morning is, remember next week we have contract rollover, right? So we have contract rollover next week. The new contract is trading at 76.21. So it's trading basically 60 points higher than this one, right? Do you mark the sellers when you see them before the 1 minute? No, no, Jimmy. Just you're marking the sellers. You're going back and marking the sellers, right, Jimmy? So here, right, you go back here and you mark the sellers. Right, you go all the way over here and they go, okay, there's sellers here. See? The sellers are back here, brother. They're not here, right? And you always wait for the candle to close. Always, 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 always. Where's the inventory on a market profile chart? Here. The point of control. See? So the blue crap in market profile is where 70% of the inventory is. The point of control is 70% of where the inventory is priced. See how difficult they make market profile? Right? If they just told you that the blue crap is where the inventory is priced and 70% of it is priced there, and the purple thing is where 70% of the inventory is priced within what they call the cost basis, that's it. So inventory has a cost basis, right? No, inventory is not the stops, right? And Milo, you need to go, we have market profile primers. Don't worry, market profile, the way it's taught traditionally, is insanely confusing. I love the people who teach it, but they confuse the shit out of people with this value area point of control. They have a term for everything. They have their own language. And if you take a regular person and they don't know if they're coming or going, much less making any money. So let me just check this market for a second. I'm going to give you a little market profile primer, okay? Right? You stay here for that information. Don't leave this room, right? Remember Terminator? If you want to live, come with me, okay? I'm going to teach you right now about market profile, okay? Let me just bring up a chart. You see this chart? Okay. This is our current distribution, right? This is the current business, right? This is the overnight, and this is yesterday, okay? So, yesterday, this is the range of trading. The blue shit is where 70% of your inventory is priced. The purple line is where 70% of that cost basis is. So basically this is, say this is a used car lot. You got your Ferraris and your Bentleys up here, and you've got your nice cars up here, mid-priced cars, cheaper cars, and your clunkers are down here. Got it? So the majority of your inventory is priced here. You know, nice Toyota Camrys, a couple of Lexuses, stuff like that. As you get up here, Mercedes-Benz, BMW. Up here, you got a couple of Ferraris and Bugattis. Very simple. That's all it is. So you see, this is the distribution of the inventory. Then you see it getting bought in the overnight after the liquidation. Now we're taking that cheap crap and we're trying to sell it higher. And that's all market profile is. But market profile people, and God love them, they go, this is the value area, and it's the most fair place to do business. How the hell are you supposed to trade fair place to do business? You can't trade that. You need to know where your inventory is priced. They don't talk about the inventory being priced. They don't talk about cost basis. And they don't put things in simple, plain, easy to understand English. Right? They come up with these convoluted things and it just drives people crazy. And that's why market profile has no following, because it's really frickin' hard to learn. It took me years to figure it out, and it took me even more years to learn how to make any money off of it. And then when the markets changed and the ranges got 60, 70, 100 points, it was impossible. That's why we use market profile. This chart on the right, this is like a map of the city, right? So what we got here is the map of the city. And if we want to do business in this neighborhood right here, we go and we use the 1 minute chart to see, hey, what's going on in the neighborhood, right? Okay? That's all it is. So what we're trying to do is we're trying to help people go, okay, now the inventory is above us because we took this cheap crap, we sold it. Now we're putting on sale. And if we really have to put it on sale, we're going to come back underneath here, right? And come back to where we bought it all in the overnight. So this is where we bought it. This is where we sold it. Now we're putting it on sale to see if we can bring buyers in. And that's all there is to it, right? That's all there is to it. The chart that you are looking at is a sales chart. It's telling us, the 1 minute chart is telling us how are sales going minute by minute. A half-hour chart tells you how are sales going on every half hour. A daily chart tells you how daily sales were, right? That's all it is. There's nothing more to it than that. But educators have taken it and bastardized it and overcomplicated it so much that nobody knows their ass from a hole in the ground and can't trade their way out of a wet paper bag, because they're looking at the VIX and they're looking at this and they're looking at put walls and Velcro walls and gamma globulins and all this shit, and they don't know which way is up, which way is down, and nobody makes any money. But everybody sells courses and everybody sells $300-400 a month trading room memberships because they keep the people on, they keep them on the tit, right? They keep them on the tit so you never make any fucking money, right? They keep you paying $200-300 a month. You're not making a dime. And then when you say it doesn't work, they blame it on you. But you ask one of these guys, hey, tell me the business reason to go long at 44. Why would it be going long at 44? Well, that's because VWAP is there. That's where the buyers are and the sellers stop selling. So if you were going to go long 44, you'd put your stop underneath. Where would I sell? You'd sell 50, right? None of these guys will tell you in real time where to take the trade, where to put the stop, and where to get the hell out if things go wrong, right? Right? Excuse my language. When shit goes sideways in this business, and it does a lot, you have got to have trained yourself to get out of bad situations quickly so that you're not sitting around with your thumb up your ass, losing money every second. And don't feel bad, because we've all done it, because we've all been instructed that, oh, you should do this, oh, short all gaps, oh, do that, oh, do this, oh. And will these people ever say, oh, I'm wrong? No. Right? I say I'm wrong all the time. Because the quicker you admit you're wrong, the less money you lose. Right? You really just want to get in and out and get paid. How do you when the market has found the bid? When the offer starts to lift. So Milo, if you rewind this to the last two candles, when the market came and looked underneath VWAP and came back up, guess what, brother? There's the bid. Because when the market finds the bid, the offer will move away from the bid. You know, like the hot girl at the school dance. A bunch of guys line up, she walks away and makes them chase her. Really simple. When the offer lifts, you found the bid. Nice, right? Beautiful. So we base our trades on that. Look below, fail, long, stop, sell. Right? Really simple trading. Blue collar trading, but trades that you can pay your rent with, pay your phone bill with, pay your electric bill with, right? And then, you know what? After a few years, you start building up your capital, you start building up your skill. You can take trades and hold them longer, right? 75.50, Jimmy, 75.50, right? That's the edge for you here, for fast traders here. So here is for traders who have skill. Here's for new traders. Okay? You do this 1,000 times, you'll be able to take this with your eyes closed. Right? Yeah, there's a lot of really, really bad trading education out there. You know, telling people to short markets that are going higher. Just ridiculous stuff that you see, right? Ridiculous, ridiculous things. Let's talk about shorting, right? When do you short, right? I like to short at an edge when it looks above and comes back in. You short here and you put your stop here. But say you're in the middle of no man's land here and you want to short, right? You know that there's a seller at 55. So say you're shorting 53, 54. You put your stop here at 56, okay? Because those sellers are going to push price down because they're trying to capture the buying. If those sellers disappear and go like that, you pull the trade, you get out of the trade, right? You find a seller and you sell next to them. When they stop selling, you cover. Don't worry, there is no relationship with the bid and shorting. There is none, right? So you pick a level and you see when sellers are competing to sell their contracts, right? You sell alongside. Does that make sense? When they stop selling, you cover. That's shorting. So right here, if I'd been short 53, 54, my stops here, I would have been covering the 50, 51s. Worst case scenario, I'd buy it back at 52. Yeah, when they stop selling, the red line will move up. Look how it's moving up now, Jimmy. Milo. Right? Look how it's moving up. Why are they moving the price up? Why are they moving the price up? Because they see buyers. Simple. You see buyers, you move price up. When you see no buyers, you move price down. Like, haven't you ever bought anything in a store? It's the same crap. This shit is all the same. Walmart needs to sell TVs. Nobody's buying the TVs. They mark down price. That's when you short. When they stop marking down price, you cover. That's all you got to do, right? So you don't short. When the market's going higher, you don't short. You wait until the sellers show their hand. They show themselves. How does that happen? You watch the offer. When the offer starts moving lower, that's when you can initiate a short. But you don't want to do it just in the middle of nowhere. You want to make sure that you come in and you Look at that. They sold there again. So if you were short 58, 59, put your stop here above 60 and you cover 56. 2 points, 3 points, in and out. That is scalping. That is shorting with brains, right? If you're still short, buy some here at 53. When you see that offer starting to lift, cover, right? Cover, cover, cover. Very, very simple. Execution is difficult because you have to train yourself to execute. You have to train yourself to use the software so you can execute without overthinking, without stumbling around. Okay? If I told you right now, 75.52 bid, 51 stop, by the time I am finished saying that, you should have your orders out, right? As soon as I tell you, right, go bid 52, 51 stop, by the time that my sentence is finished, the orders should be in. If you're not that fast, you shouldn't be scalping fast markets. You guys understand what I'm saying? Right? So I go 75.52 bid, 51 stop. You should have those orders in right now before I even finish my sentence. Right? That is skill. You have to develop that skill. Right? You shouldn't be fumbling around putting your orders in. If you're fumbling around putting your orders and you need to go on the sim, put in the bid, put in the stop. When the bid gets hit, throw out the sellers. You need to do that 1,000 times a day. Like Michael Jordan throwing 1,000 free throws. Because execution is a physical skill. It's a physical skill. You have to train your mind-body connection. If you don't do these things, you're going to be stumbling around and you're never, then you're going to go and try and trade a fast market and you're like, oh my God, there's a big wick, right? You say, oh, I got wicked out, right? Oh, this happened. Oh, this happened, right? No, it's because you're not fast enough. You got to be fast. If you're going to trade a fast market, you got to be fast. And let me tell you something. Learning how to trade fast is one of the most important skills that you can have. Not because I want you doing 300 trades a day, but because I want you to be able to get out of bad situations quickly without sticking around, sucking your thumb, going, ooh, what should I do? And every time you sit around and go, ooh, what should I do? There goes $5,000. There goes another $5,000. There goes another $5,000. Right? The longer you take to get out of a bad situation in finance, the more it's going to cost you. So you need to have a business reason to get in a trade and a business reason to stay in the trade. And that has to be trained physically into your, into your reptilian brain so that you react. It's like when a pilot hits turbulence, they don't go, right? Yeah, exactly. Like when you're in a plane, if the pilot came on and go, good morning, passengers, this is American Airlines Flight 7452. We are going to be hitting some turbulence in about 2 minutes. And I don't know what the fuck I'm doing. So I'm just going to go read the manual. Hang on for dear life. Now, do you think that's a good way to run a business? Hey, Anne-Marie, how you doing? That's not going to inspire confidence. You have to train yourself. What would be my play? I don't have a play. I'm waiting for a setup. So right now my play would be to sit and watch and see what the next order of business is. Right? So we're running out of supply. We filled the single prints from yesterday. We still have a seller up here at 61, 62, right? I'm thinking long, right? If we retrace back to the overnight high, maybe it'll a little long there at 56, 57. Stop underneath. You know there's going to be a seller up here at 64, right? So we're getting rotation. If we get over 63, we're looking for that 64 seller to step in, right? And you just use where the sellers initiated, right? Where the sellers initiated, they will initiate again, right? Size sellers will always sell at the same place, right? So where are we? 75.63. Just go look to the left. When you go look to the left, you'll see where the sellers are, right? They're going to come in and they're going to sell. They're going to start selling these levels, right? So there's sellers here, right? So if you are long, these are places where you might want to take off a little bit of product, right? Simple. You took out the overnight high, right? You take out that overnight high, you ran the stops. You can use bracket orders if you want. I like to do things manually because it's my belief that if you want to do this and you want to make money at it, spend some time on your execution skills, right? Bracket orders are great if you want, but I don't need them to trade fast, right? And I suggest that you guys join me. Learn how to trade quickly. When you come into the room, we do execution labs. I show you how to use the DOM, how to put your orders in quickly, how to move stops around, how to get out of trades badly. So when you get out of trades, you're not thinking about them, right? You're trained to react, right? Very simple. A lot of people now avoid work, right? Thoughts on trailing stops? It's fine. If the market supports it, trail your stops, right? If you want to hold runners, great, honey badger. But if you are not consistently profitable, for the love of God, do not hold on to runners, right? Buy it, sell it, short it, buy it back. Get in, get out, get paid, get consistent. Once you start getting consistent, you can start holding runners, trailing stops, holding trades for longer, right? But if you're not making consistent money in trading, don't worry about that. Put your buy in, put your stop in. When your buy gets executed, put your sell orders in. If your sell orders get executed, you've made some money. If your sell orders don't get executed, get the hell out of the trade before they chop your head off. Right? Do you understand? Do that 1,000 times. Once you've developed the skill, because right now, if you're not consistently profitable, if you don't know what you're doing, then runners and all that sort of thing, that's more sophisticated trading that you don't have the skill to do. People hate hearing that because other trading rooms tell you, oh yeah, you should hold a runner and you should be looking for 20 points on this move, right? But you don't have the skill to do it, and you're going to panic and you're going to make bad decisions. I don't see what's wrong, even if you make $50 a day and keep it. You're ahead of 90% of the traders out there. Because a lot of traders, oh, I made three grand today, I lost it yesterday, the day after, right? If you can make $50 a day and keep it, if you can make $100 a day and keep it for 3 months, you're doing better than 99% of the folks out there who are making fun of you because they're not making shit. I can tell when traders are profitable and when they're not. Because they're like, oh yeah, you only trade for 3 points. Oh, it's 3 points more than you got, and I'm keeping those 3 points. So when you blow up your account in 3 days, I'll still be making 3 points. It's not glamorous, but this is not a glamorous business. If you want to be in a glamorous business, go watch The Devil Wears Prada and go work for like Givenchy, right? Or go work for Christian Dior. Go and do something glamorous. Get into fashion. Trading is not glamorous. It's hard work. There's nothing wrong with 10 seconds. Sometimes fast markets you can't hold your trades for 10 seconds. Right? So you are going to have to adapt your trading to the rules of the place that's funding you. Right? There are always constraints in this business. There's always people putting rules on you, and you're always going to have to adapt. Sure. When do you switch from the micro to the mini? I would say you would switch after 3 to 6 months of being consistent. Hex, if you're consistently good on the micro and you're doing well, you can start switching to the mini, but keep your size small. Okay? And if you have any challenges, always go back to the micro. Go back to where you started. Right? Go to the inception of the of the business, right? See, a lot of people will trade the micro for 2 weeks and then switch to the mini. Boom, and the account's gone, right? When you're trading other people's money, you're always going to have to trade within the confines of that prop firm, right? And I think a lot of the prop firms, the rules are changing, so, I think the CFTC is going to be regulating a lot of these firms, so you got to be really careful, right? I'm a big believer in being long-term greedy. What that means is not pushing it all in one day. What about ETF IVV? I have no idea about IVV. I've never looked at it, my friend. I don't even know what it is. So what about it? Are you looking for levels to buy or trade off of, or are you looking for a breakdown of what's in it, or can you be a bit more specific about your question? I'd love to try and help out. Now let's see if we can come back down to VWAP, or if we have to. If you're using the micro to test, okay, but are you consistently profitable, Hex? Because it's okay to take a trade with a couple of micros and then switch to the mini. But if you're not consistently profitable, you shouldn't be switching to the mini in the first place. It's not a feeling, it's a business. So if you're profitable on micro, then you're ready to scale up. If you're not profitable on micros, then don't scale up. It's simple. Yeah, so why are you breaking your rules? Right? So here's a good thing, right? Right? Take your hand and put it on your desk, right? And every time you break your rules, take a hammer and hit your hand with it. Okay? So, right? Because listen, if you were on my trading desk and you had that arrogant dumbass attitude, I would make you go clean the toilets. That would be the only trade you had. You'd be trading your seat on the desk for a toilet brush. Okay? Because in the business there's we don't have time and we don't have the luxury of fucking around with people who don't do what they're told. Right? You do what you're told or there's the door. But because this business loves to suck hold to people who are like, oh, I blew up my account, right? Take a hammer and hit your hand every time you do something stupid. You'll stop pretty damn quick, right? Look, if you want to be in this business, you want to be in this business, right? Take your head out of your ass and go do some business. Otherwise, you know, do something else. Well, I know it's tough love, but man, I mean, you can't placate people, right? Oh, poor kid. Oh, you're being arrogant and you blew up your account. Let's pat you on the head and give you an ice cream cone. That's not how the real world works. Travis, you're a welder. Travis, what if you welded something and something broke and somebody hurt themselves? Right? They'd can your ass so quick it would make your head spin. Right? Like you work with people in very dangerous situations, right? If you do something stupid on a welding rig, right? They'll can your ass so fast it makes your head spin, right? So don't take luxuries. Don't take luxuries in this business. Don't fuck around, right? If you're a dumbass, maybe find something else, like maybe go be an artist or something, right? And take pictures of plants and bees and hummingbirds, right? Where you can fuck around and nobody gets hurt, right? Right? Do something where, if you're going to have your head up your ass, you're not going to hurt anybody and you're not going to suffer economically. I really don't know what kind of situation is, right? That's okay. I got a buddy of mine who's a folk musician. He's never had a real job in his life, right? But he's very talented and he's a great folk musician. But he has a hard life because he makes no money, right? But he's incredibly talented and I think that's great. But there's no way in hell that he would ever want to trade, right? So you got to choose, man, right? You got to grow up, put on your big boy pants, right? You got to put on your big boy pants and go to work, brother. There's no way of getting around it, right? That's the next JJ AI will be a Tesla robot that actually punches you in the back of the head when you do something stupid. Okay, what are we doing here? See, I was teaching you that, I was going off on that, and we missed that 52 long, right? I was trained, the people who train me, they don't put up with mediocrity, and they sure as hell don't put up with any kind of, like, these guys. If you don't answer the phone on the first ring in my business, you're fired. Okay? You're fired. That's it. There's no second chances. Right? Because there's 300 other guys who want your job, and girls. We've got a nice rotation going here. Let's see if they sell into this again. Right? So your IVV, who is that? I don't even know how to pronounce that name. Chiropodus. This IVV, I don't know anything about it. All I know is it's back to cost basis. On IVV, there's a 752 to 756 cost basis. They went and retailed it out over 763, and now it's back into the 750s. I'd be looking for resistance at 758. I have no idea what the hell it is, and that's off a half-hour candle chart. How do you stay relaxed with that type of urgency or pressure? Well, in the old days, it was called Jack Daniels and Marlboro Reds. Now you guys have mindfulness and meditation and all that stuff, right? But in my day, it was a Jack and Coke and a Marlboro Red, and you hang out with the boys and the girls, and you have a few laughs, and you blow off some steam. That's how we used to do it in the old days, right? But you do have a lot of fun on trade discs. Now this is a look above and fail of 62, right? We have a nice rotation going on. Sorry, guys, I'm got off into the weeds here a little bit. I apologize for that. But we have a nice little rotation here between 75.50 and 76.64. So we can just kind of bing, bang, boom, bang, just trade that back and forth until it breaks. Hey, Mike, how's it going? Right? Yeah, there's a lot of luxuries people have now that we didn't have in the old days, right? You know, there's a lot of, like, we didn't have the luxury of, mindful and all that stuff. You know, shit needed to get done, and if it doesn't get done, they'll find somebody who can do it, right? That that's all there is to it. There's. So in our business, that's just the way it worked, right? You either put up or you get out. So that's what we call a rotation. Sellers are here, they stop selling here. Sellers are here, they stop selling here, right? So if you came in just now, you could go and you could draw this out and just trade the rotations. I don't like trading in the middle, but you can see the middle of that zone at 56, 57 is quite reactive. You know that there's a seller here at 61. If we clear that seller, we're going to go up to the 64s. Okay? Right? It's just a rotation. Right? The inventory from this morning is below us. It's below 75.50. We are retailing it out here for profit. Very simple. Very simple. Let's see what's next here. Yes, the look below and fail struggles when you're in trend down. Right? So Cesar, that exactly right where you drew your circle, that's exactly where they're going to sell into it. Okay, so that's why the better look below and fail is at the bottom of that blue zone instead of the top of it. See? Because the bottom of the blue zone down there at 75.36, that's where you get the best deal. And the selling hasn't finished yet. So you'll take that look below and fail of 75.40 and get stopped out. Right? And then you'll use that information and go, aha, I'll wait till the bottom of the balance zone because the selling's not over yet. Get it? Oh, why is Cisco red? I don't know. Maybe it's because he hasn't had any sleep. Too much loco moco. Yeah. Welcome to trading, Cesar. It's clear as hell after the fact, but when you're in the trade, it it's not clear when you're in the trade. But what you were trying to do is we were trying to teach you to use that information that you get from getting stopped out to go and put together the next trade, right? See, we want to teach you. Okay, you're going to make mistakes. You're going to be wrong, right? Right? if you're not used to being wrong, this is a very difficult business for you because we have to admit we're wrong quick and get out, right? For guys, it helps to be married because your wife tells you you're wrong all the time, right? So you get used to be going, oh, I'm wrong. Okay, okay, I'm wrong, right? The quicker you admit you're wrong now, when you're wrong, don't get all upset. Take the information you got from getting stopped off and go, oh, okay, I tried this trade here, but there's a seller there, so now I'm going to mark where that seller is, and I'm going to wait for a better entry. Aha, I was too early. And that happens, right? We use the information from our mistakes as feedback, right? Yeah, you're an engineer, right? The engineers are the toughest people to teach trading because you guys are highly intelligent. You can do differential equations in your head. I have 13, 14 buddies who are engineers, from aeronautical to mechanical to electrical. They're smart as hell, but they hate admitting they're wrong, right? And traders have to be a little bit more happy-go-lucky, right? They have to be a little, oh, I'm wrong. Okay, I screwed up. Okay, just hang on, right? So you can maybe think of trading more like being a scientist and a trade as an experiment so you don't become attached to the outcome. Now, the problem with that is the outcome is financial, right? So it's really hard to detach yourself from a financial outcome, right? Unless your uncle is Scrooge McDuck and has tons of money to give you, right? That's why we practice. That's why we journal. That's why we dig apart trades. That's why we rewind charts. That's why you practice on the sim. That's why you use funded trader accounts. That's why you don't expect to make money when you first start doing this because you're not, right? That's why you never quit your day job when you start trading, right? In fact, it's always good to go and have multiple sources of income if you're a trader. That way you're not taking stupid trades just to try and make money because you're desperate. As soon as you get desperate, oh my God, it's horrible. It's like the market can smell desperation like a dog smells fear. It's the worst. So once again, now you're short the 62s. Your stop is 64. Put some bids around 88. I mean 58. God, I need my glasses. Okay. Right. If the candles start getting really small, right? If these candles get really, really small here, take it easy. Wait. Right. When you get these nice big things, it's great to trade. But if the candles start doing this now, leave it alone. That's no go. Right. Yeah, I'm not talking about percentages, Alexander. What I'm doing is I'm just talking about trying not to be attached to the outcome, right? So when a scientist does an experiment, I don't know very many scientists that have a 99.9% certainty that the experiment's going to go their way. I know a lot of PhDs. Um, you know, so I don't know about that, but all I'm doing is trying to say is have an open mind, right? Try and have an open mind and admit you're wrong quickly. That's all I'm trying to say, right? I'm not trying to say, talk about percentages and shit like that, but when you're wrong, admit you're wrong quick and don't screw around, you know? Overanalyzing markets is very, 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 very dangerous Because the problem is, Alexander, when you're over analyzing a market and the market reaches out and punches you in the face, you don't know how to react. I know lots of successful engineers. I'm going to DM you, Cesar. We'll have a chat. There's that seller just under 69. Remember, inventory was short when we came into the day, right? So remember 75, 76, our old friend, right? 75 and 3/4, 71 and 1/4, 76. That's going to be our target. Now there's a seller here, and it's going to have to snake its way above those sellers. It's very, very hard to admit you're wrong for a lot of people. Luckily for me, it's never been hard to admit I'm wrong. My mother used to tell me I'm an idiot all the time. So I got used to it, right? It's a lot easier. I know this sounds really bad, but it's a lot easier for dumber people to be successful in trading than really smart people. Okay? Just because they're used to admitting they're wrong, right? That's all it is, right? I'm going to get in trouble for that. But it's true, right? That's why, you meet guys in the brokerage business and you're like, this guy can't even put a sentence together and he's making 500 grand a month. What the hell's going on? Right? And then you get a guy who comes in and he's got a couple of PhDs and he can't trade his way out of a wet paper bag. Right? I think the best training for being a trader is to go sell something on a street corner. Go sell jewelry, go sell, go sell fake Rolexes, go sell something, have and compete with other people and see what it's like to compete to sell your product. And once you do that, oh my God, you'll completely understand how markets work. See how useful it is to mark off where the sellers are? Because as soon as we clear that level, right, we clear our little balance and say if you were long at 65, 64, 66, you know that there's a seller just under 70. And look, they're there, like to the penny they're there. Right? Right? So I want you folks, right, to come into our room, learn how to trade, do yourself a favor. Next week, and from now on, coming from next week, we'll be doing multiple training sessions during the day that are not on YouTube, right? And we'll be doing a lot of stuff on how to change your trading for various market conditions. We'll teach you how to hold trades longer if you have the money. We'll teach you how to build the skill, right? It's like the song says, you got the looks, we got the brains, let's make lots of money. Okay? All right? Come check us out at the Trading Syndicate. If you spend a month with us in the room, and when you join the room, don't just join the room and kind of look around. Join the room and reach out to me, bug me, go, JJ, hey, listen, I want to do a phone call with you, right? You know, let's do some one-on-one coaching or something like that, or I'll even give you an hour for free to help you sort out your problems and get you on the right path. Reach out, okay? Make use of it. You know, when people want my advice, when companies want my advice, they pay 150 grand a month for me to consult. If I work on a deal, it's 150 grand a month and 1 million free shares. You guys are getting it for 40 bucks a month, right? Take advantage of it, right? Take advantage of it, right? I'll teach you how to make money, right? If you want to learn how to hide a short position in Switzerland for a year, that's going to cost you more. But for regular, normal money making, we will teach you how to make a living, okay? Do yourself a favor. This market's going to get difficult. It's going to get hard. Come into a room that actually cares about your success, where the guys will spend time with you, right? No problem, Hex. You needed a tune-up. Just think of it as spring cleaning, right? So I gapped the spark plugs, changed the oil, rotated your tires. Now you're ready to hit the road again. I remember when I started on the trade desk, there was this lady, and her name was Denise. We called her Dee. She was the best. She was our head trader, and I sat next to her. And sometimes I'd pick up the phone and I'd start calling in a trade, and all of a sudden she'd throw a stapler at my head, or whatever she had that was close within her hands, like a stapler or, anything, a pencil, a pen. She wouldn't throw the phones because she was usually on them. But, a stapler would work really well, like a stapler or anything that was on, office supplies. And she'd be like, put the phone down. What are you doing? Right? And you need that in this business, and we'll give you that. Right? If you're stubborn, we'll break you like a mule. Right? And we'll teach you good business habits. Okay? Thanks, everyone, for joining us. Appreciate you guys. Have a wonderful, wonderful day. Come join us at tradingsyndicate.org. And when I'm asleep, we have an AI that has been trained with all of my teachings. And the thing even sounds like me, so that's there for you for free. We include that with the cost. Okay? Talk to us, right? Like Maverick says, talk to me, Goose. If you have problems and issues, reach out. I'm around. And I love helping people. Okay? Thanks, everyone. Be careful out there. Don't take candy from strange market makers. And we'll see you tomorrow morning. Bye for now.